The patience of Fed officials, or will we see a big rate reaction to the inflation data? Michael McKee, Bloomberg Daybreak Asia.
After the bell, we heard from Rivian Automotive. The company reported a narrower than expected loss to begin the year. The company says it lost $1.25 per share on an adjusted basis in Q1. Now, the street was looking for a loss of $1.56. Revenue for the period, $661 million. That was pretty much in line with street expectations. The electric truck maker has been working to cut costs and ramp up production. Here's Bloomberg's Ed Ludlow.
Simplifying everything, going back to basics is working. Production dropped sequentially quarter on quarter, but that was only in the van that Rivian builds for Amazon. The consumer car, they ramped production, and now they're just being disciplined.
Bloomberg's Ed Ludlow there. Rivian also reaffirmed plans to build 50,000 vehicles this year. You might recall last year the company fell just shy of its own target of 25,000 EVs. At the same time, Rivian said it's now targeting profitability in 2024. Shares in Rivian up 5% in late U.S. trading.
And let's take a closer look at some earnings here in Asia. South Korea's e-commerce giant Coupang has reported sales that beat estimates in the March quarter. We get the story from Bloomberg's Joanne Wong in Hong Kong.
Revenue rose 13% to $5.8 billion, exceeding the estimate of $5.6 billion. Operating profits was more than $106 million, and active customers grew 5% to 19 million. That's as the company's core delivery business grew exponentially during the pandemic. Coupang also managed to sustain growth in the post-pandemic period. That's in part thanks to its fast delivery service, known for promises of dawn delivery. Coupang is reportedly looking to expand market share. Among new initiatives, it's expanding its delivery business in Taiwan. In Hong Kong, Joanne Wong, Bloomberg Daybreak Asia.
And I'm Brian Curtis, along with Doug Krisner. I thought Lisa Shallett made some interesting comments there. And basically what it comes down to is, from a market point of view, if you do get an agreement, and that agreement means a cut in spending, that may not be good for markets because it could hurt growth. And if there's no agreement, well, the consequences of that are almost unmentionable.
Yeah, it's interesting to try to figure out how much the market discounted the economic jolt from the Inflation Reduction Act. And if some of that now is in doubt, perhaps you're right, Brian, that there is a real cloud when it comes to growth. And speaking of growth concerns, we can talk a little bit now about the disappointing read on Chinese imports last night. That was a pretty dramatic number, negative 8%? As the street was looking looking for something only 0.2% in terms of contraction.
Yeah, it really speaks to stumbling in domestic consumption, and we'll have to see whether that picks up. We have been saying all along that with the recovery there, that people on the street, they're cautious because they were locked in for a long time. They don't have the same sort of support system and government transfer payments that we do in the United States, and so it's not easy to let go and to do that revenge spend. They have been doing it to a certain degree in restaurants and bars and that sort of thing, but it's on a lower level. It hasn't fed through yet into the bigger ticket items, and among them, we just saw that expressed in the exports, down 7.9%. Even the export number was pretty good at 8.5%, but that's such a low base of comparison when there was very little business activity at all last year during this period because of the lockdowns in Shanghai.
And if you look at what the market is telling us right now, as measured by the NASDAQ Golden Dragon China Index, the ADRs that trade here in the States, we are down 5.7% so far this year, so the market's not expecting a lot.
And I got a great line for you. It might even get the great Doug Krisner to chuckle a little bit, and here it is, because this is also weighing on markets. With Europe and China, we might have hit the point where the rubber meets the Belton Road. It's pretty stark what we heard from two leaders in Europe overnight. Italy is signaling, at least to the U.S., not confirmed yet, but it's signaling it intends to pull out of the Belton Road initiative, so that's a pretty big deal. The only country in the G7 that was taking part. And then you had Olaf Scholz, the German chancellor, really talking about China as a rival now and not a partner.
Yeah, and also Germany's foreign minister was kind of applying a little bit of pressure, you would think, on Beijing to do more to try to bring some type of end to a war in Ukraine.
Yep, and we know that doesn't appear to be happening anytime soon. All right, Doug, thanks very much. Let's get to our guest, Dana Peterson, chief economist at the Conference Board, will join us, as does Rashad Salamat with me, Brian Curtis, here in our Hong Kong studios. So we made the comment, Dana, about whether or not there is an agreement on these debt ceiling negotiations, that might mean a cut in spending. I'm sure you've looked at this. How bad might that be for markets and growth in the economy?
Well, I mean, the cuts in spending would likely be over a period of 5 to 10 years, so it wouldn't necessarily be an immediate effect, but certainly markets are going to pull that forward and say, well, this is a negative for the economy. But we have to remember, debt is really outsized in the U.S. It's just under 100%. It's going to 200% of GDP in 30 years. And so that's not really the scenario that's good for the economy. So there needs to be some addressing with respect to some fiscal discipline here. Will it be painful? Yes. But it's necessary in order to make sure that the U.S. remains a competitive economy, not only in financial markets, but globally.
Dana, but, the thing is, we're having the world's reserve currency. You can print as much of it as you like, so it doesn't really affect the U.S. as badly as it does other countries.
I think the U.S. doesn't go around printing money necessarily in the way that you might think that there's this machine that's pumping out cash. But the thing is that the U.S. prides itself on paying its debt, right, and also fiscal responsibility, and that certainly comes under question every time you have a debt ceiling debacle. And certainly there are concerns that debt as a share of GDP is going to get so out of control it's going to erode the government's ability to invest in things that actually do produce growth, or if there is some other crisis or big recession, there'll be no fiscal space. It also crowds out private investment, because if you're a private investor, would you prefer to spend or invest in high-yield corporate bond with a lot of uncertainty, or something that might be perceived as a safe haven, which is U.S. Treasuries? And if all that's called into doubt, then we certainly have a big crisis on our hands, not only in the U.S., but certainly for global financial markets.
Also, in listening to trader comments, we've talked a little bit about the complacency in markets with this debt ceiling discussion because we've got another 3 weeks to go before we get to the deadline period. So this is probably going to play out over the next 3 weeks. We do have the CPI report coming tomorrow, and I was about to say that in kind of listening to what traders have been saying and kind of testing the waters generally, it doesn't seem like the looming CPI is causing a lot of angst in markets. Why?
Well, I guess because people are just waiting for it to come out, and it's either going to show material improvement or not much at all, right? So we have seen headline CPI come off, and that's because gasoline prices have gone negative. But it's that core measure, excluding food and energy, where you still have a lot of pricing pressures from housing, which is really rents, which reflect what happened 18 months ago in the housing market, and also very strong demand for services and insufficient supply of workers, causing labor shortages and higher wages that are getting passed on to the consumer. So this is the same story that we've been dealing with. So I think markets would probably only be really surprised if we saw material improvement in that core measure that might cause the Fed to take a look.
Dana, how are you at the moment assessing what's happening with the American consumer? We used to always refer to the U.S. consumer as being indefatigable. Is that consumer still that?
Well, we do actually ask consumers what they're thinking, and in the short run, they continue to say that they are doing okay. That's because most consumers are working and or they saw a modest increase in their wages. But when it comes to the 6-month outlook, consumers continually say over the last year that they expect a recession on the way, and they're becoming more concerned about the business outlook, their own personal finances, and certainly the jobs outlook. And so consumers have already started pulling back on buying durable goods, and that's because you have higher interest rates. It costs more to finance that car, that furniture, or that house. But consumers are also saying they're cutting back on highly discretionary services and really just focusing on the basics.
But Dana, if people don't lose their jobs, can you really see that dramatic of a pullback in spending?
Well, we've already seen spending pull back for durable goods. And so the last piece of the puzzle really is services. And if people think that they might lose their job, even though they probably won't, but if they believe that, then they will pull back on spending. And I think that's really the last shoe to drop in terms of softening the economy to help bring down inflation.
Right, Brian Curtis here, Rashad Salamat. I think that what Rish wanted to ask you about was the impact of spending on earnings, perhaps. So if you're looking at, we just went through an earnings season that held up pretty well, even with the cutback in spending, the cutback in durable goods that you mentioned. Is that something that can continue, and would they just shift to, smaller items like we talked about what we're seeing in China?
Well, I think when you look at earnings, it really depends upon the industry. Certainly the tech sector is not doing very well. We're hearing ominous soundings from transportation and warehousing because people are not purchasing as many goods as they were purchasing, and so that means there's less to ship. We're also seeing angst in the real estate market, certainly as housing activity has fallen off, consistent with higher interest rates. So we do think consumers are saying to us that they're going to shift to cheaper forms of services. Instead of going to the movies, they're going to stream. So we do think that's going to happen.
Okay, Dana, excellent stuff. Always a pleasure to have you on the program. Thanks very much for joining us. Dana Peterson, Chief Economist at the Conference Board. And if anybody knows consumers, it's the Conference Board. We're looking at markets. At the moment, more on that coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
6:22 on Wall Street. I'm Doug Prisner at Bloomberg World's headquarters in New York. Bloomberg Daybreak Asia is brought to you by IBKR Investment Advisors. You can switch to IBKR Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. It's all at ibkr.com/RIA. We check markets throughout the day here on Bloomberg. There was a defensiveness in trading today ahead of that critical inflation data tomorrow morning. We'll get the CPI data 8:30 a.m. Wall Street time. And also weighing on sentiment, the impasse of the debt ceiling saga. It seemed to really get a little more aggravated today. We saw perhaps not a lot of appetite for risk. Equities were lower across the board, not by much. NASDAQ Composite, the big loser, down about 0.6%. S&P off about 0.5%. And where the Dow is concerned, a loss of about 0.2%. U.S. yields drifting a bit higher at the short end. The 2-year was up 2 basis points to 4.02%. We'll talk more about markets in 15 minutes. Ed Baxter is next with a look at global news headlines. Ed.
Well, all right, thank you very much, Doug. The summit and the debt ceiling has ended apparently with no agreement, no movement. Joining us is Bloomberg White House reporter Josh Wingrove. Thanks, Josh. Now, this process played out over the years in one way or another. The whole atmosphere surrounding this seemed today extraordinarily tense. Am I just tense, or was it tense?
Well, it depends. There's sort of two views, whether you want to put on rose-colored glasses here or not. They emerged sort of bonking each other on the head, which, granted, is pretty normal in Washington. Speaker McCarthy saying he didn't see a lot of progress from this debt limit meeting today, which, of course, the White House would say was a fiscal reform meeting, not about the debt limit. But they did launch talks, so there are signs of actual progress here. Staff going to be speaking as soon as tonight, teeing up another meeting with these 5 principals, the president and the 4 congressional leaders later this week on Friday. So that is movement that we haven't seen. Remember, the meeting today was the first in 3 months, and to have another 3 days from now shows you that things are ramping up a little bit. But the big question, of course, is can they get a deal? McCarthy would not take off the table a default, which of course makes it a live threat here. And so, we're all waiting to see where this goes. Leader McConnell, the top Republican in the Senate, of course, saying that he thinks the U.S. will not default. And we're about to hear from President Biden here shortly about the meeting. They just added on a speech to his schedule for this evening. So lots of moving parts here, but there is some movement if you sort of look through the partisan bonking that is sort of part and parcel.
Yeah, Josh, I want to dig down, though, on the default issue itself. because you said it. Mitch McConnell came out almost like he was unhappy with McCarthy, saying there will be no default. Does that mean that they will reach an agreement, or that there is some? And then McCarthy said that the House had already passed a bill that took care of the default. So is there the possibility still that there could be default?
Yeah, yes, there is a possibility. So let me back up. The House bill was a Republican-only bill, a messaging document, and, it doesn't have a chance to pass the Senate. And you can hear me at the White House. I'm being called to the Biden speech, so I'll have to let you go here shortly. But Biden had passed his budget, which, of course, doesn't have a chance to pass the House. So both sides have passed things that don't have a chance of going anywhere. And so the question was, when are they going to sit down and start talking? And that's today. Leader McConnell trying to sort of calm things down a little bit, but of course McCarthy's grip on the speakership itself is pretty slim. It took a bunch of votes for him to actually secure the job. And so the question is, if there is a deal, can McCarthy sell it to his members and hold on to the speaker's chair? And if he can't hold on to the speaker's chair, he probably won't agree to the deal. So that's the live one.
Yeah, so we have that all going on, and the politics. Do you need to go, Josh? If you do,
I'm going to run up to the president's speech now. I'm sorry, guys. We're going to you'll have to tune in with us, I guess.
Thank you so much.
Thank
we
you
really
so
appreciate
much.
it.
Thank you.
Yeah, thanks, Josh. Bloomberg's White House correspondent. Just a couple of more headlines here. Donald Trump has been found liable for sexual assault in the E. Jean Carroll case, and also for libel. $5 million is the damage the court has assessed. China's ordered a Canadian diplomat to leave the country. Singapore banks will be able to share information on potentially risky clients next year. And the U.S. Preventative Services Task Force has revised its recommendations regarding breast cancer screening. They're saying now that women over 40 need to get the screening. They say they've seen a tremendous increase in cancer between women between 40 and 50 years of age. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg. All right, guys, back to you.
All right. Well, indeed, we are going to be having a look at markets and more. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Asia.
Just nearly 7:28, 6:28, I should say, right here in Hong Kong and in Singapore. Very good morning to you. It's nearly 6:30 in the evening on the Atlantic seaboard of the United States. I'm Rashad Salamat.
And I'm Brian Curtis, and we should mention that as soon as President Biden starts talking, as soon as we get word, we will cross to him at the White House and bring you that. The meeting between the president and congressional leaders apparently did not provide any relief and no real